your source for profit. Hear what you need to know to succeed in today's real estate market.
You see, realtors will always tell you that real estate is local. Everything is local until you need the data on a local basis. So let's go ahead and continue. We got a lot to cover here. I'm going to try and get through as much as possible. If I have to do some more tomorrow, then I will. So this next area is a number of sales transactions which closed during the month. And so what we're going to go through here is we're going to look at the actual sales by month this year. And what you're going to see here is that year to date, there's been 8,080 closed sales thus far, 14.7% lower than last year. July, 0.7, let's give it 1% higher than last year. Look at these other numbers. You see a trend here for the last, 4 or 5 months? So everything is going fine. And then the corona stuff comes in about February. And then we see March. And then we see April, 36% down. And then we see May, 51% down. So now what we're seeing is things coming back. It's a rebound. The market's coming back. That's what they're telling you. We went from 51 to only 10% down to now it's only 1%. So it's been climbing. It's been coming back in a big way. Maybe. Again, houses on the beach, houses on the intercoastal, houses out west, houses southern part of Broward, northern part, they're all going to be different. How do you know which ones are coming back if you're just looking at a 35,000 foot view looking down at this? This kind of data can get you in serious trouble. You need to break it down by zip code, by subdivision, to make sure you know what's happening. Just like the coronavirus itself has had hotspots around the country where people got sick, there's some sick markets down here. There's some sick subdivisions, and it's up to you to dig in and find those subdivisions. Seriously. So let's look at the next group of numbers. This is cash sales. So how many people like me, investors, peepers, are coming in and buying stuff for cash? And so again, you look at this and it hasn't been very good for quite some time. It looks like the best, it was really bad for cash buyers. Can you see this? I got to raise it up. So July 2019 and then August 2019, it was bad. And it started getting, and then December, it kind of leveled off. January was okay. And then all of a sudden, the bottom fell out with the corona. Nobody wanted to touch property down here. 64% off in April, 50% off in May, 11% off, 14% off. So investors, what this thing is saying, investors got alligator arms. They pulled back, didn't know what was happening. And what you have to understand is, when do investors pull back? I told you earlier, pro tip number 10. When they see it's a seller's market, that's when we pull back and have to do a lot of data. When we see people are going nuts and there's a frenzy, there's people from New York and New Jersey and Connecticut, Massachusetts just buying sight unseen, as I showed you in a video a couple of days ago. They're just coming down here and I just need to get out of the Northeast. Hey, we're going to back off here. We're going to back off. We're going to let other people at this point become the cash buyers. So we're going to pull funds out. We're not going to jump in yet. We're not going to see what's happening. It's kind of a crazy market. So we're just going to let these numbers stew, and with these numbers we're going to be able to determine when it's time to get back in. So if you're an investor, you knew in May and April, get the hell out. Something's wrong. This corona's crazy. We don't know where things are headed. And now, sure enough, investors with cash, foreign buyers, international buyers, people from other areas are beginning to buy. But, just as I said, it doesn't necessarily mean it's happening in every market. You need to research the cash buyers specifically in the market you're trying to farm. Understand? That's a big tip again. So let's continue. So now we're going to be looking at something called cash sales as a percentage of closed sales. Similar to what I just said to you above, what we saw, and let me just move this. I'm going to move my head for a second. So you can see here, basically in July of last year, 17.4% of the sales in the market were cash. It rose to February, 21% of the market was cash, and now it's at 14%. So that should tell you cash buyers are there. They're just not ready yet. It's almost like that scene in Trading Places with Eddie Murphy and Dan Aykroyd when Eddie goes, ready? Not yet. Hold off. It's coming. We'll tell you when it's coming. Not yet. But it's coming. And the beauty of this. Many realtors, many investors don't know when it's time to let everybody know that you're buying. You see, I don't know if they're looking at what charts they're looking at, but you can see we're getting to a point. It's down to 14.8. It's been falling. April was really low, but right now we're almost getting pretty low in terms of the low point of cash buyers in the market. Why is that? Think about it. Why is that? And I'm going to tell you. When that absorption rate that I spoke to you of, this is pro tip number whatever, shows you that it's a seller's market. Well, those of us who do investing and buy cash for properties we don't intend on living in, we back off. If those prices are 97% of listing price, have at it. You're not ready for us yet. You guys are swimming. Everything's fine. Everybody's flipping deals. I'm not flipping deals, buying houses, moving in, and you're getting 97, 98% of your list price, and you're closing sight unseen in 30 days or less. Have at it. Jump in. We're going to wait. We're going to wait a bit. So let's look at some more data. So I'm going to scroll down here, and next thing is median sale price. The median sale price is fine. This is one of those things that, as an investor, I don't care about it. It doesn't matter to me. I don't care what the median sale price is because I'm only going to pay what I want to. The reason I'm doing all this data is because I'm going to tell the seller what I'm willing to pay when I'm willing to tell him that I'm willing to pay that. So I'm not as influenced by the median sale price because I know that this median sale price, which is now up to $400,000, and the price has been climbing, as you can see. In May it was $372, in June it was $390, in July it was $400. So it's over the median sale price for the year. If the median sale price of the year is $385 and we're at $400 now, again with that low absorption rate and with that quick sales period of time, meaning it's going to market in 30 days and they're getting 97% of the list price, whoa, sirens going up. Don't go yet. You don't buy a stock when it's at its highest point. There's no way. You always buy the dip. There's pro tip number 11. I don't know. Buy the dip. Read the book. Buy it. Seth Godin talked about it. It's well known. You do something called buy the dip. Now, I could spend an hour talking about buying the dip, but I'm not buying a dip when it's over the median sale price of the year. The median sale price of the year here is $385,000. In July, it was $400. In June, it was $390. In May, it was below the median price for the year. What happened in May? Yeah, it's coming. It's coming. So you need to know this data. again, by subdivision if necessary. So we're going to go by here. This is average sales price. And when you get to average sales price, again, this reaffirms what we just saw. When you see the pricing is over, it's actually over the average sales price for the year. It makes sense. The absorption rate is low. Inventory is low. People are coming in and buying from other areas of the country. They need to get away from New York, get away from New Jersey. And so they're making the prices fluctuate. If you notice here, I mean, at one point in September of last year it was $433. So we're way over that market. That's a huge fluctuation in just a short period of time. So just letting you know. Just letting you know. Then you get down here to dollar volume. I don't really care about that, how much in the market was selling. This one here, median percent of original list price received. Look at these numbers. So over the last year, it's been at 96% plus of list price. But I told you how to look at list price to make sure that's correct. But in any event, July is the highest number on this chart. Look, it's almost 97. It's at 96.9. It's at the highest point. Who buys a stock at the highest point? I mean, if it's Google, maybe. If you're looking for, a dividend check once a year, you might do that. That's not how I buy real estate. I'm not looking for a dividend check from Google. I want to make some money. I'm in real estate to make some cash, not just skirt by. Be right back.
Your source for profit. Hear what you need to know to succeed in today's real estate market.
Hey, thanks for checking out this clip of the Barry Cunningham Show. Every weekday, Monday through Friday, I talk about real estate and the trends and news that affect real estate and making money in real estate. So if you want to see us live, just go ahead and click the subscribe button below, or just click the link below, which is going to be a link to the archives of all of our live shows. And then we'll go ahead and cut these up and get them out there so you can see the clips of the various shows. But in any event, I'm glad you're watching. Please continue to watch and have a great day. Get out there and make some money. And we'll see you on the next episode.